Hello everybody and welcome to the midweek market update from Smack the Markets for the 3rd of June. So the US civil unrest seems to be continuing, along with the tensions with China, which don't seem to be progressing at all very well. And on top of that, today we have the EU stimulus plan, which has now hit a bump in the road from Germany. So let's take a look at a few markets that we discussed on Monday, how they're progressing, and some of the opportunities that we're looking at going into the second half of the week. So if we come along to the Dow first of all, if we recall from Monday, the market was testing this level here on the, if I open this up, testing this level at 25,500, and we were saying this is going to be a key decision point for this market as to whether the market was going to be able to break through, continue its move to the long side and continue this trend, or whether this was going to roll over. If it took out 25,000, then this was the sort of critical point here that would then sort of open up further moves to the short side. As we can see what's happened, the market has been very resilient, as they have been for quite some time now, and the market has now sort of progressed higher. Now this has only occurred recently in the sort of past sort of day or so of trading. If we take a look at this on the daily chart, again there's quite a few levels in here because of obviously of all the sort of move to the short side here, also coinciding with the structures that the market put in way back here when we were in the long trend before. So the structure levels that we have where the market may well make a decision is the next one is at 26,000. So that's not too far away from where the market is at the moment, only about 150 pips, which is nothing in today's sort of markets. Above that, we have 26,600, and above that, we have that 27,000 level. So these are the sort of structure points to the long side, as long as this trend stays intact. So for us in the trading room, we certainly don't want to fight this trend, still be looking at opportunities to trade in between these trading windows in the direction of the prevailing trend. At the moment, on the if we take a look at this on the 4-hour chart again, some sort of retracement could be in order, but possibly back into moving averages, back into geometry zones, looking for strategy setups. Now, if we come and take a look at silver, silver has weakened off much more than we initially expected. So again, if we take a look at this on the daily time frame, silver's had a very good run lately, and it was rather stretched and extended across most time frames. The 18,950 area here proved to be just too much for the market to get through on this occasion, and now the market sort of slipped back. So we were looking for initial retracements back into 1850, which is this level that we can see through here. The market didn't really hold any support there, and now it's sort of slipped back further. So it looks like the next sort of structure point that the market may well retrace to is around that sort of 17,700. Again, if I just sort of zoom out of this on the daily time frame, you can see that 17,700, quite a well-tested structure point here that's been tested as support and resistance many times. So looks like we'll get a clean sort of decision here as to the next sort of move, but the trend is still long, and if we do find support at 17,700, then that would put in a higher low, and we may well be looking for another attempt of those highs again. Our overall here, I'm still bullish on precious metals, so gold and silver, but silver is the our sort of preferred trading partner at this moment in time. So we discussed two forex markets on Monday. The first was dollar CAD. Again, we were looking for more continued weakness in this market, because if we take a look at the daily time frame, we had this 136 level here, which hadn't been tested. So this level now has been tested. It's been sort of surpassed. We're getting a bit of sort of sideways action at the moment, a little bit of a pause, but again, still looking for continuation of weakness on dollar CAD, possibly down to the 134 level. Because the market's had such a good run already, it's not surprising that we're sort of having a bit of a rest, maybe a bit of a consolidation, but our bias is still to the short side on dollar CAD. Now, similar story here with the dollar Sing. Again, the similar sort of structure here. We were looking like this market short from 141 as it broke the level. Our target level on this one initially is down to the 139 area. You can see that we still got some distance to go, still liking this one to the short side as long as the intraday trends continue. Mid time frame trends looking sort of quite reasonable, so pullbacks into geometry zones, possibly maybe even back into this sort of 140 area is quite a nice level here, or quite a nice sort of round number, I should say. So possibly setups in around those sorts of areas could be sort of quite nice for new shorter positions. So looking at new opportunities going into the tail end of the week here, we come to the Aussie against the Kiwi. Now, Aussie markets have had a very, very good run lately. They've been extremely strong, and at the moment we're just expecting a little bit of a pullback here. So if we take a look at this on the weekly chart, you can see the very strong week that we've had. In fact, for the past few weeks here, the market's been very strong, and it's ploughed through this sort of key 74 level here, and you can see it's been sort of key support and resistance. So with the stretched extension, some sort of retracement back into this zone might be quite reasonable, even for a continuation of the trend. So if we come down to the daily time frame, you can see that we've got a couple of levels here on the daily chart. One's around 74,300, one's around sort of 73,450, but you can see that there's a sort of a zone here, a couple of where the market sort of tested these two levels a number of times. So 74,300 is the top end of this. Obviously the big number in the middle is that 74,000. Again, if we come back to the 4-hour time frame, you can see sort of 74,300 brings the market back into the top end of the moving average zone here, so it takes out all of the extension of the recent leg of this move. So if we do get a retracement back in here, it does bring it back into the geometry zone for the 4-hour time frame. Now again, I'm going to come down to the 60-minute chart here, because if we just run our analysis on the 60-minute chart, you can see that at the 74,300 area, we've got quite a bit going on there. We know there's a level there. We've just seen that from the higher time frames. There's also a pivot point there today, and there's also a 50% retracement of the fib retracement here of the recent leg of this trend. So some sort of pullback into this level coincides with analysis on multiple time frames, right the way down to the 60-minute time frame. So again, we're looking at sort of retracements here, seeing if the market sort of pulls back to a healthy area. Still, from a macro perspective, like in this market to the long side. So there's a few markets there that we're keeping a close eye on going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.